What income level is required to buy a home at different price points? That's actually a really common question that I get a lot, and a lot of first-time homebuyers really have no idea how much money they need to make to qualify for a home, and that's actually the first thing you need to know before you start looking at houses. So I'm Kathleen Carmical. I'm a mortgage lender here in the Atlanta area. I've been in the real estate business now 25 years, and I've worked with a lot of first-time home buyers. Knowing how much purchasing power you have for your next home is critical so you don't get hurt when you're out there looking at homes you can't afford. In this video, I'm going to discuss what the average home price is around the country, how different factors might go into play for what you can qualify for, how average home prices vary throughout the country, and that might be a good thing for you, and what you can do as a first-time home buyer to maximize your purchasing power for your first home. Okay, so the median home price in the United States right now is $402,343. That is an incredible 46% increase since 2020. But don't despair if you haven't bought a home yet. I think it's always a good time to buy a home if you're going to keep the home for a long time. If you think you're going to get 46% equity in the next few years, probably not a good idea to buy. That's not the reason to do it. Buy a home because you want longevity in a home, you want something for your family. That said, in order to buy the average home in America, you need to make $110,871 on average to be able to afford it. Now, there's a lot of factors that go into, why somebody is qualified for a home and how they can maximize the amount that they're qualified for. Okay, so we look at things like, obviously, the home price. How much down payment are you putting down? What is the interest rate? And these fluctuate not only weekly, monthly, but even sometimes daily. The property taxes and the insurance for that particular property can really make a big difference into how much you qualify for, and your debt to income ratio. Now, I've made a lot of videos in the past talking about debt to income ratio and credit and things like that, so I'm going to link to those below. You're definitely going to want to know how to calculate that for yourself. But let's talk about this and why it's so critical. I have a client right now who is increasingly frustrated because she first started looking houses for her. When she first started looking with her agent, she was qualified for a certain amount because the rate was about a half a point less than it is right now. Another issue that she's run up against is that certain houses have higher taxes or higher insurance than what we've estimated for. So you need to check around in your area. Are you looking in a low tax county or are you looking in a high tax county? In her situation, she started by looking in a low tax county. And so we were estimating that. She changed counties, I didn't know that, and she started looking in a high tax area, and then she found a house. She wanted me to run some numbers, and she was shocked to know that it was beyond the monthly payment that she could qualify for. So you've got to know all of these little parameters in order to know what you can qualify for. That said, there's a general rule about income and how much you need to have in order to qualify for different homes. So in this chart that I made for you, I've outlined some average first-time homebuyer price points around the country that I think are important. You may live in a really high-cost area like, let's say Seattle, Washington, or Hawaii, or New York City, and these price points are not going to be realistic for you, so I always recommend getting a real loan qualification from a real mortgage lender. I'm happy to help you throughout the country if you're interested. These are just going to give you a general idea, and just remember, every one of these things has variables in it that could make it not exactly right for you. Okay, so let's look at $200,000. For a $200,000 house, your average income is going to need to be about $59,000 in order to buy that house. $300,000, it goes up to $88,500. A $400,000 house, you're looking at $118,000. And for a $500,000 house, you're looking at nearly $150,000. These estimates assume only a 5% down payment, and I did that because most first-time home buyers do not have 20 or 25% to put down, and a lot of the calculators that you'll see online are assuming that you do have 20% to put down. I don't think that's realistic for most people, especially considering how much houses cost. So I'm only assuming 5% down payment. I'm assuming a 30-year fixed rate mortgage at 6.5% interest, and property taxes and mortgage insurance are also included at about 1.2%. Now, I live in Georgia and we have pretty good taxes. You may live in New Jersey and your taxes might be a lot higher, so you definitely need to take that with a grain of salt. Private mortgage insurance is included, and if you don't know this already, you have to pay private mortgage insurance unless you're putting at least 20% down on the home or you have 20% equity. And the total monthly housing costs do not exceed 35% of the gross household income. Now here is a little bit of an explainer on that. That is just a good rule of thumb. A lot of people are qualified, realistically, up to 45% of their income, but I think you should be cautious when you're buying your first home because there are many things that you're not thinking of because you haven't owned a home before that are going to cost you money every single month. So if you can stay in that 35% of your gross income, I think you should, but you will be able to be qualified for more. In fact, we can go up to about 50% of your gross income for most Fannie Mae and Freddie Mac if you have excellent credit. Now, I already mentioned how taxes can vary from one county to the other, and home prices obviously vary from one state, one city, one county to the other. But if you're looking to buy a home and you live in a high-cost area, you may be able to purchase more if you're open to moving slightly further out than you had thought you wanted to live in. So there's some great small markets that are really affordable. For instance, Pittsburgh. Pittsburgh is actually a beautiful city, has incredible sports venues, incredible academics, and it's really a pretty topography in my opinion. Memphis, Cleveland, mid-markets all around, Chattanooga in the south. There's a lot of cities that you could live in if you're open to moving. But let's say you live in the Atlanta area like I do, and you really want to live downtown where houses are much more expensive. Open your mind up a little bit and move not just to the suburbs, but maybe even a little bit further out to the exurbs, to a smaller market like Dahlonega or Cartersville. These are small but growing and vibrant communities where you can get a much larger bang for your buck, and you can actually find something that's beautiful to live in on a first-time homebuyer's salary. Now, it goes without saying that if you live in the West or the Northeast, you're going to have to make a little bit more than you are if you live in the South or the Midwest. I will say in some of the coastal communities, particularly California and New York City, they do have some first-time home buyer programs that allow you to make a little bit less, so you'll definitely want to check those out. Some ways for a first-time home buyer to improve their purchasing power is by improving their credit score. I say this all the time. If you have a better credit score, you're going to have a lower rate. If you have a lower rate, you're going to qualify for more house. You're also going to have cheaper mortgage insurance, which is going to affect your debt-to-income ratio. All of that's going to be a good thing. Also, if you have a good credit score, chances are you don't have a tremendous amount of debt. And debt is really a killer for first-time home buyers who are trying to maximize their budget. If you have debt, I suggest trying to pay that off as fast as you can in order to buy the best house that you can. Just remember, debt on things like credit cards and cars goes down. Those things go down in value. Debt on a home actually appreciates. So the debt that you use on your home, you're actually going to make money from it, assuming that you're going to get appreciation on your home, which historically has always happened. Finally, you're definitely going to want to check out some first-time home buyer programs. A lot of small towns and municipalities have grants for people to move into their area. So you're going to want to check and see what's available to you in your area. So talk to a lender who's really well versed in first-time homebuyer programs, down payment assistance programs, grants, and doesn't mind doing the work for you, because it is a lot of legwork and a lot of lenders don't want to be bothered. So if they say, oh, we don't have anything like that, check with somebody else, because chances are there's something available in your area and you need to know about it. As always, every situation in real estate is personal, so I highly recommend that you reach out and get a pre-qualification with a valued lender that you know. I'm happy to help you throughout the country. I have associates and affiliates throughout all 50 states, and I'd be happy to help you if you are considering buying a home. I do still think it's one of the best investments you'll make. You definitely want to weigh the pros and the cons, and you're going to want to know what's comfortable for your budget and stay within that budget if you can, so that you will like being a homeowner and not hate it. Thanks for watching. I'd love to hear about you in your area. What are you finding in your area for average price point? Is that something that first-time homebuyers can even attain? What's going to solve our housing problem? I'd love to hear your opinion, and I'll see you next time.